In North America, 94 million retail investors buy and sell stocks. These people want to know what stocks to buy. They want to know when to buy and when to sell. Meno Finance tells them where the most successful investors are investing right now. Social trading is using a social network to make investment decisions. Meno is a social trading platform. It allows you to manage virtual portfolios. All transactions are executed at market price, like real transactions. It works like your brokerage account with E-Trade or TD Ameritrade. Meno uses algorithms to rank investors. Meno finds the investors that consistently pick profitable stocks. Then, it presents their transactions all in one location, in real time. Therefore, anyone can replicate the trades of the best investors. Meno also manages model portfolios. Every time a transaction is made in a top portfolio, the same transaction is duplicated in a model portfolio. For example, a top trader buys a biotech stock, the same stock is automatically added to Meno's biotech portfolio. I want Meno to become the most influential service in the personal finance industry. Nothing less. In the current model, there is a divide between professional money managers and retail investors. With Meno, this division collapses. We prepared a video that highlights how Meno works, and I'd love to run it for you.
Meno Finance is the world's leading social trading platform. It gives you access to top investors whose strategies you can mirror trade for trade. If mutual funds were invented today, this is how it would be done. Here's how it works. Thousands of proven, professional, and individual investors share their portfolios on Meno Finance. Their trades, holdings, and investment performance are all viewable by users of the site. We make it easy to search, filter, rank, and evaluate top investors. So whether you want to invest in the US or China, short-term or long-term, in telecom or biotech, you can find portfolios that fit your goals. If you like what you see, you could switch from virtual currency to real capital at any time. The best part is you don't need money to invest or a trading account to join Meno Finance, and any level of experience is welcome. It works just like any other social networking site. You have a profile, friends, and of course, your own portfolio. Meno Finance. Meet the best traders. Check out their trades.
Investing in the stock market is my passion. I made my first trade at 16. I lost a fair amount in dot-com stocks in 2000. But since 2001, my return has been over 20% a year. And of course, you can follow my trades in real time on Meno. Before Meno, I was a strategy researcher and practitioner. I worked a few years at Lehman and JP Morgan. After my PhD, I hold a research position in strategic management. Meno is what I've been working on for 3 years now. Meno Finance emerged from a PhD research project. I will tell you more about that in a moment. But before I go on, I'd like to introduce Nick and Alex, who couldn't be with us today. Nick specializes in the design and development of financial systems. He's led the development of more than 20 systems at GE Capital. Alex is also a software engineer, and he specializes in social network technologies and online advertising. As I said before, Meno emerged from a research project. There is a lot written about how you should invest your money. The approaches vary widely. The value investors will tell you one thing, the technical traders will say something totally different. A few years ago, I became obsessed with a question. Well, what I believe to be the question. What type of investor is the most profitable in the long run? Should you stay in a trade 2 weeks or 2 years? Should you be happy with a 5% return or 50% return? So I did a simulation. I created 300 types of investors. Each investor had a particular profit expectation, investment horizon, and degree of risk tolerance. And I used 10 years of market data. Most of the 300 investors weren't successful, but a few of them were very successful. So it got me thinking, what if most investors could identify and follow the good traders? A second simulation was done. This time, all of the investors could follow the trades of the best traders as they became known. The result was pretty impressive. Most of the portfolios performed better. At that point, I realized that I was playing with something potentially disruptive. In 2007, I tested the idea with real people. I hired Nick and Alex to build a prototype. 400 traders used this prototype to trade Dow Jones stocks for 3 months. The traders were divided into two groups. The first group worked by themselves. The second group had access to the trades and performance of everybody. So the traders in the second group were able to copy the best traders if they wanted to. The second group performed much better, both overall and individually. They spent less time looking for good stocks and they made more trades. The business potential of the service was obvious. In 2008, we created Meno version 2. This version was used by 2,000 traders in the UK. In 2011, a beta version was completed. And now we are ready for global release with a gold version. Thanks to marketers, we have very detailed descriptions of North American investors. We know their investable assets. We know how they make investment decisions. We know how much time they spend on the internet. Mainstream investors have less than 100,000 to invest. Affluent investors have more than 1 million to invest, and mass affluent investors are in the middle. Mainstream and mass affluent investors are the ones that matter. Together, they make up 93% of all investors. 45% of investors like to do their own research. They are self-directed investors. And as you may expect, the internet is the main source of information. Affluent investors are more likely to consult an advisor, but most people don't. Financial advisors actually don't have a good reputation. 3 out of 5 investors don't trust them. More and more, investors rely on internet services. In North America, 94 million investors trade stocks, 86 million in the US, 8 million in Canada. Of these 94 million, 45 million actively research stocks online. The internet is their main source of information. In Europe, 15 million research stocks online. These are big numbers, but what's really interesting is the sort of money that financial services companies are ready to pay to reach investors. Investors are by far the most valuable users. They are 10 times as valuable as those interested in travel or cars. At the moment, Meno is an internet publisher. Fortunately, we are in the most profitable area there is. Out of all industries, the financial services industry spends the most on online advertising. This year, the US financial services industry will spend $2.4 billion. Online advertising spending is expected to grow 50% by 2014. The financial services industry is spending less in print media and more online. The industry is also developing a social media presence. I'd like to draw your attention to the last row on the slide. You can see that about 10% of online advertising budget is spent on social networks. A few investment management firms operate their own community of investors. These companies are Meno's main competitors. The main strength of these companies is that they are well positioned financially. They have the money to do interesting things. Let me give you a few examples. Zeco, a discount broker. The clients of Zeco can share their portfolio. The company has raised $30 million. Its most important backer is Velocity Capital. Covestor, an investment management firm, $6.5 million from VCs. Union Square Ventures and Spark Capital. Marketocracy, hugely successful, $13 million from VCs. US venture partners and Formative Ventures have backed the company. Catching was a social investing site. Intuit acquired Catching 2 years ago. The amount wasn't disclosed, but I heard that it was in the area of $40 million. VCs were quick to realize that online investing is changing. Retail investors use the internet to do their own research, and soon they will do most of their research on social networks. The trades of fellow investors are becoming their number one source of information. Meno structures this information. It identifies the best investors and it presents their trades in one place. Now I'd like to explain where the competition hits the wall. The competition fails by focusing on actual trades. Our competitors are investment management companies. They are trying to build a social network of investors, but it's difficult for them to acquire a new user. They have to find people that have money to invest. They have to find people that are dissatisfied with their current broker, dissatisfied enough to switch. That's why the competition isn't able to build up a large community of investors. But Meno is a content publisher. For a content publisher, a user is easy to acquire. The business strategy is to develop a large membership base. Most of Meno's features are free of charge. That's the best way to build up a membership base and promote the use of the service. Our goal is 800,000 users within a year. The company makes most of its revenue from advertisement. The business model is very profitable because investors are the most valuable audience. The company also offers premium memberships. Premium memberships gives you access to more advanced features on the platform. At the moment, Meno focuses on the North American market. It covers the Amex, the Nasdaq, the New York Stock Exchange. In 1 year, we will go global. The company will cover 5 additional exchanges, and I'm very excited about China. In 1 year, the company will also offer corporate accounts. We are currently developing ad solutions that are contextual and social. That's to help advertisers to connect more effectively with investors. Here's an example of an ad that's well integrated with the content on Meno. A user is replying to a post about IBM and is offered a free investment research about IBM. Advertisements that are well integrated enhance the user experience. Plus, advertisers get more bang for their buck. So really it's a win-win for everybody, and we have understood this. For a content publisher, 2 key variables matter: the size of the membership and the level of engagement. Engagement, that's the frequency of the visits and the number of pages viewed per visit. We were very conservative when we worked out the business model. It's assumed that a user will initiate on average 2 visits per month. 8 pages will be viewed per visit. There are 2 ads per page. Therefore, 800,000 users will generate more than 25 million ad impressions. In online advertising, eCPM refers to the revenue per 1,000 impressions. It's the revenue earned by a publisher. In the scenario in blue, the earning per 1,000 is $10. This scenario is very pessimistic. When we have a more steady flow of traffic, the earning per 1,000 will be in the area of $25. That's the scenario in gray. Last time I checked, Meno was at $23 per 1,000. The click-through rate is the number of clicks on an ad divided by the number of impressions. For example, if an ad is delivered 100 times and receives 2 clicks, then the click-through rate would be 2%. In our experience, a click is worth about $1.35. To be on the safe side, it's assumed to be $1.20. We expect that 1 out of 250 members will be premium members. The premium membership is offered at $25 per month. So the average user brings $1.20 per month or $15 per year. Our goal is to have 800,000 users within a year. The growth stage will begin at Q4 2013. The company will go global. Meno will cover the 5 most important exchanges outside the US. The goal is to double our user base within a year. Meno will reach 1.5 million users. We will launch corporate accounts. Investor relation teams will use corporate accounts to communicate information about individual stocks. Investment professionals will also use these accounts to market financial products, for example, mutual funds. We will also introduce social and contextual ad solutions. Meno will offer a range of premium services to investors. Premium services will include access to industry-specific portfolios, for example, biotech and telecom portfolios. Subscribers will even be able to auto-trade these portfolios in their brokerage accounts. I hope it's clear that I'm not just presenting a social trading platform. There is a broader vision behind Meno. Our vision is to create the most influential service in the personal finance industry. We are a social network and a media company, and we offer services to both retail investors and corporations. This slide shows the projected valuation of the company. The projection is based on similar acquisitions. In the field of personal finance, a user is worth between $10 and $40. If Meno has 2 million users in 2014, the company would be worth between 20 and 80 million. We believe that in 2016, the company will be a prime target for traditional money management company, for example, Invesco or TD Ameritrade. The company will also be attractive to media companies, for example, News Corp. The figures that you see next to the development stages show the capital required. $400,000 was needed at the startup stage. To initiate the early stage, $1.8 million is needed. This is how we intend to use your money. The staffing costs are $420,000. That's all explained in the business plan. Marketing is our main expense. 30% of the marketing budget will go to media relations. It's important that the company gets coverage in traditional media. We are ready to connect with the most influential journalists. I want you to read about Meno in the Wall Street Journal. Also, 5 high-impact videos will be produced. And you know as much as I do nowadays, a video that goes viral can make a company. IT includes market data feeds, web hosting, telecommunication services. Administrative expenses are kept to a minimum. I actually require that staff use their own phones. Social trading is a financial innovation. It's changing the way that people make investment decisions. Meno has a strong value proposition because we've been listening to investors. Investors told us that they want to know where the best traders put their money. They told us that this information has to be structured, and they don't care if real money is involved. To build this project, I had to find the best technologist. Nick is the guy that knows about financial systems. He spent years developing them at GE Capital. Alex knows how to make developers perform at their best. He's a great developer himself. Me, I've shown that I can deliver. Meno is ready for global release. I'm looking for smart investors to make the project a success. With the right partner, $1 invested today would be worth between $6 and $20 within 4 years.